Welcome back for another report on the gold market. The gold market continues to entice traders with its latest indecisive movement. During the past week, the precious metal ascended, reaching a new monthly high and almost touching at $1,760, yet the upward momentum was quickly abandoned and gold has moved downwards in the past two consecutive daily sessions and reached lower today, Tuesday the 13th. Through this report, we aim to review matters that are currently in the gold market's attention. As a conclusion, we will also be looking into gold's technical analysis, pointing out levels we consider important. Overall, this report will be short and to the point. We start first with a view over recent comments made by the US Federal Reserve Chairman Jerome Powell, who seems to remain on the radar of gold traders that have the tendency to scrutinize his comments for valuable information. In the past days, a report by the Wall Street Journal noted that J. Powell sees the US economy improving further, with output and job growth on the rise in the months ahead. The comments are based on the vaccination process, which is carried out rather rapidly in the US, counting for over 120 million people already receiving a single shot of vaccine. J. Powell also commented on the speed of the recovery, which seems to be on the high, while he also noted job creation could be extraordinary in the next consecutive months, with a figure of 1 million jobs per month, according to estimates. However, to be clear, gold's price tended to move higher in the past week despite the positive outlook on the US economy and the improved economic data. Yet, according to the dollar index, the greenback moved lower in the previous week, confirming its relationship with gold's price remains adverse for the time being. According to Reuters economic calendar, Federal Reserve Chairman Jerome Powell will take part in the Virtual Economic Club of Washington interview on the 14th of April, and caution is advised as his comments could move gold's price considerably. At the moment, the downward trend line forming on gold's chart in the current week seems to be attributed to the bond markets and the yield activity in the most recent sessions. Elevated yields have the tendency to push gold's price lower. Higher yields weaken gold's ability to be used as a measure against high inflation, thus making it unattractive to investors. As long as the bond yield activity is in play, we may see further weakening of gold's prices. In the following days, traders should be aware of some economic data from the US that could possibly move the gold market once the figures are released. On the 15th of April, a rather busy day, we get the weekly initial jobless claims figure, the US retail sales figure for March, and the Philly Fed business index for April, along with the industrial production figure for March. In this case, traders could focus on the overall picture of the readings, and the market may react accordingly. Finally, on the 16th of April, we get the housing starts figure for March and the preliminary University of Michigan sentiment for April. Moving now to gold's technical analysis and for our chart. At the moment, we are observing gold's price activity coming downwards from a recent high. Gold is currently trading above the S1 1720 support level, making it a possible first stop in case the sell-off persists. Lower than that, the S2 1705 barrier can be the next bearish stop, while at the end, the S3 1690 hurdle represents the lowest support line. On the contrary, a move higher could send the yellow metal to the R1 1745 resistance level and test it. The R1 is a rather sturdy level that has been tested various times in March and April, but had only been breached to the upside twice. Even higher, the R2 1760 level is the most possible target for the bulls, as was the case on the 8th of April when gold reached a monthly high. Our R3 1775 resistance level is in our opinion the stop higher and could come into play with extensive buying power. The RSI indicator below our chart shows the selling was extended in the latest sessions, as its trend line is pointing to the third level, confirming the bears are in charge at the moment. In April, so far, we are seeing a sideways movement between our R2 1760 resistance level and our S1 1720 support level, confirming that these are at the moment the most important lines and could prove make or break levels depending on the market's appetite. We hope that you found the report useful, and if so, don't forget to subscribe and to share. From all of us here at IronFX, best wishes for solid trading.